Hi, welcome to this quick presentation on IND AS 116 Leases, which is similar to IFRS 16. This video is for educational purposes only, and this will give you a gist of what has changed from the old accounting standard IAS 17 to IFRS 16. This video will also quickly go through why the standard is changed. Let's start. To start with, I want to first explain the purpose of this standard, and this will also tell why the standard has been changed. The main objective of the standard is to enable users of financial statements to have a complete and understandable picture of entities' leasing activities. Let's move forward. We'll come back to the slide again and then see whether the new changes help the users to have a complete and an understandable picture of entities' leasing activities. So to start with, let's first go through the list of things which are not in scope of the new standard. Lease for non-regenerative resources such as use of minerals, oil or natural gases, biological assets covered under IAS 41 agriculture, service for concession arrangements covered under different IFRS, license for intellectual property, and right held for licensing arrangements such as rights for films, videos, patents, copyrights, etc. So first let's go through the accounting method in the old standard IAS 17, and let's then look at what has changed from the old standard. So this standard has got accounting treatment in the books of both lessee and lessor. The biggest question to ask is, will the lease transfer substantially all the risks and rewards incidental to the ownership? If the lease transfers all the risks and rewards, substantially all the risks and rewards, then in both the books of lessee and lessor, this is treated as a financial lease. And if the answer is no, then in both the books of lessee and lessor, this is treated as operating lease. How is a financial lease treated in the books of lessee? A lessee has to recognize the lease asset and a liability. The asset will be recognized at lower of fair value or present value of all future lease payments. When it comes to subsequent recognition, the lessee has to provide for depreciation. In case of an operating lease, lessee need not recognize an asset and liability. Instead, he just records the lease payments as expenses in his income statement. In the books of lessor, when it's a financial lease, the lessor de-recognizes the asset and liability. Just opposite of what the lessee did, he recognized the assets and liabilities. In case of lessor, he de-recognizes the asset and liability. The lessor then recognizes a finance lease receivable for the money lent to the lessee. All future lease receipts will be split between repayment of finance lease receivable and interest income in the book of lessor. In case of an operating lease, the lessor recognizes lease income over the lease term. Now, let's look at what has changed in the new standard IFRS 16. It's quite simple. So the first thing is, there is no change for the lessor. Everything has changed only for the lessee. The lessee need not ask the question anymore. He need not check whether substantially all the risks and rewards have been transferred. There is only one accounting treatment for lessee in the new approach, in the new standard, and it simply wants the lessee to recognize a right of use asset and liability in both financial and operating lease. There is no more classification between financial and operating lease for lessee in the new standard. And if you think about it, the reason for change is quite simple. By recognizing right of use asset, the lessee is now able to tell the users of financial statements that about the future cash flows related to the asset. Of course, there are some exemptions given if the lease term is less than 12 months and there wouldn't be any option to purchase the asset, or if the underlying asset is of low value like computer or office furnitures, then the lessee can book all the lease payments as an expense in the income statement. In all other cases, the lessee has to recognize right of use asset. And the value of right of use asset is similar to the old standard. He has to recognize it at fair value or lower of fair value or present value of future lease payments. Thank you for listening to this.